And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talk. We are at episode 92. Now, this week episode, we will be talking about the recent Grayscale win, in the case Grayscale versus the SEC. That will be mostly about the lawsuit that they have done against the SEC concerning the rejection of their spot ETF. We'll also be talking a little bit about a major crypto influencer called BitBoy, who, well, quite frankly, got sacked from his very own brand. I can make jokes about that, but I'll be taking the high ground here, and, well, we'll see more about that one. And naturally, I want to talk about let's say about renewable Bitcoin mining. I wanted to say something else, but I know currently I'm having a little bit difficulty here with my English. I've got difficulties finding my words here. No, I'll be talking about renewable Bitcoin mining. It will be an introduction, as I am planning to start highlighting everything concerning renewable Bitcoin mining. In the sense that I want to get deeper into the mining aspect, by reason, well, plenty of institutional investors, plenty of companies, etc., have difficulties grasping Bitcoin mining and making wild claims and statements like, look, as long as more as half of the Bitcoin mining power isn't renewable, we aren't stepping in, etc., etc. So plenty of myths to be debunked, and it's a special series I want to do, and we'll probably get around to it. Anyway, let's start here with the very first news item here, the head item, which is, let us begin with something else. Current state of the market, perhaps. Now, as you guys can see, everything is nicely in green. We see a little pump here. There we go. Let's load it a little bit. Yeah, there's a little bit of a descent going on. Come on. Doesn't want to load. There we go. So, in the last few days, we saw Bitcoin having lost a little bit of its momentum, trading in the red in the last 7 days. And now suddenly we had a major pump here, which was the breaking news of Grayscale winning its case against the SEC. It pumped nicely up, and now we are seemingly experiencing some heavy sell pressure. Now, what do we see here on the graph, on the 7-day graph? Well, you see, we were a few days in the red here. We were circulating at around 26K trading level. Take the averaging here. It becomes more obvious if you look at monthly day. And we see we came from a higher high, crashed down, and there was a high resistance level around the support level, around 26K. This one here was as a result of the Ripple news that we were at higher trading level, higher trading ranges, and, well, other news made it crash down. However, if we start zooming out, we see a nice trending uptick. This was last year. This is the FTX crash which occurred. And ever since January, we are going on up. As you guys can see here, it is a little bit layered. See, it's in stages, so some momentum. Oh, a dip, back up. Major dip, back up. Sideways trading. Major dip, back up. However, momentum is fading. We are back lower here. We might expect some good momentum going on, though I expect we will continue trading at around 26K. Once again, by reason that the good news is being sold currently. Despite that, there are, as you guys can see here, good metrics going on for a continued bull run. However, as I say, do not get sidetracked. Know when to DCA, and as you guys can see here, we were trading sideways for a prolonged period of time, for about a week approximately, as the hype died down from the XRP win. And you guys can tell there's sell-offs going on here. zoom out 7 days. We had some nice uptick, but you can see there is some selling pressure going on, so be wary of that. I wouldn't step in now immediately. I'd wait a few more days, see what the market's doing. In any case, 26k is the lower trading bound, the lower trading range that I would aim for to DCA in. This is a little bit of a fluke just to, well, close down the long trades. That's about it. Let's head on over towards our main meat, the biggest news item here, which caused this sudden jump. And as you guys can see here, come on, Grayscale wins court battle against SEC. Regulator must review Bitcoin ETF application. Now, what is this all about? Well, earlier this year, we had Grayscale having its demand for spot Bitcoin ETF being rejected. And well, with all that is going on in the crypto market, Grayscale decided to countersue the SEC and say, look guys, what the hell is happening? Why was it rejected? And this is basically what the article is about. This is basically the news. By reason, yesterday the judges said, look, they said to the SEC, you guys indeed need to clarify more why Grayscale spot ETF was rejected. And that is currently being seen as a win. Now, where it concerns ETFs, so spot ETFs, future ETFs, myself, I'm not all too big of a fan. And in my personal Telegram group, where plenty of my students are, I've already talked in great detail and multiple times how ETFs shouldn't be seen as bullish as they are being represented on the cryptocurrency market or in general. By reason, an ETF is a trading fund. It is paper money being traded. In the case of Bitcoin, this implies it is paper Bitcoin being traded. Naturally, a variety of ETFs exist. For that, I'm going to refer towards a little live stream I've done a bit in the past here. So it's a previous episode of Blockchain Talk, episode 89. And as you guys can see here, I went over to Investopedia and I clarified the various differences among the various ETFs which exist. What passive and active ETFs are, bond ETFs, stock ETFs, future ETFs, spot ETFs, all the various differences, and also which ones are more important than others. Now, same here with the ETFs of Grayscale. We are talking about a spot ETF. To give a very quick summarization what a spot ETF is, it implies that you are trading paper Bitcoin. However, the broker, the guys who are offering the paper Bitcoin, need to have the actual asset backing it, meaning there's a one-on-one peg going on. Say, for example, that BlackRock has its spot ETF for trading. It implies for each and every ETF that it makes available for trading, which is paper Bitcoin at that point, it must be pegged by actual Bitcoin being held in their wallets. That's the principle of a spot Bitcoin ETF. It is different from a variety of other ETFs, whereby you are, like future ETFs, for example, whereby traders will still be betting on future price action of Bitcoin. But the major difference is that there is no Bitcoin being pegged behind it. Only a mixture of a variety of bonds, paper assets, etc., etc., which will try to emulate Bitcoin price in order to offer, well, a Bitcoin future ETF, paper Bitcoin. So as you guys can see, there's quite a lot to digest there. Spot Bitcoin ETFs are seen as the most bullish ones by reason, well, there is actual Bitcoin involved being used as a backing asset. As I said to my students, I'm going to repeat it here on the live stream. Even though spot Bitcoin ETFs I look upon more favorably, do not expect me to be highly positive about it. reason's quite simple. We are still trading with paper Bitcoin. Even with the one-on-one backing with actual Bitcoin behind it. However, there is one little catch here, and that has to do with the institutional investor itself. They hold the Bitcoin in your name. They become a Bitcoin whale. And on my main website, I've written an extensive article. It's on graciousInterests.com. And in it, the blog is titled Fear the Whales. And there I was mainly talking about Michael Saylor having purchased a great amount of Bitcoin some time ago. I believe it was last year. And whereby I said, look, it's nice seeing Bitcoin moving, but we need to be wary about institutional investors becoming way too big whales. By reason, each and every whale has the possibility to leverage the market, to play with the prices. And especially with the introduction of ETFs, will this danger become a reality? It means that a variety of paper Bitcoin traders have leverage over the Bitcoin market, meaning that they can push down prices or highly appreciate it, depending on what is best for them and not so much for the holders and the actual users of Bitcoin. So that's a danger you guys need to keep in mind. Anyway, a little bit of subtlety needs to be given here where it concerns the Grayscale news, because apparently, and that's the reason why I took this little tweet from Whalewire and want to highlight it, there are quite a lot, many Bitcoin maximalists are claiming the news of Grayscale winning a SEC lawsuit, which means the Bitcoin spot ETF was approved. That isn't really the case, as you can see here in the tweet. I'm just going to continue reading for you guys. Either they haven't read the actual lawsuit or are purposely spreading misinformation. Lawsuit was tiny and simply SEC trying to overstep again by blocking a review to have their other GBTC product converted to a Bitcoin spot ETF. It's all about review. There are dozens of ETFs currently in review, and all will likely be denied by SEC. This changes nothing, but the Maxis will spin the story to create hopium, as well as few of their sheep actually do their own research. With here a little review on what is being said. So I'm going to highlight it for you guys. Zooming a little bit in, I assume this is going to be a real copy and not doctored. On petition for review on order of securities before Silvana's judgment, this cause came on to be heard on the petition for review of an order of the Securities and Exchange Commission and was argued by the Council on consideration thereof. It is ordered and adjudged that Grayscale's petition for review be granted and the Commission's order be vacated in accordance with the opinion of the court filed herein this date. Long story short, same thing what Whalewire is saying here, and which might deviate a little bit here from some of the titles you might see here, such as Grayscale winning. No, in all actuality, what is being asked here is that how I'm going to put it. Previously, as I mentioned, Grayscale asked the SEC to create a spot Bitcoin ETF with the funds they already have, and it was back then rejected. Now, no good reasons were given, and as a result, Grayscale sued the SEC. And now the judges simply said, look, guys, the Bitcoin spot ETF for Grayscale still remains rejected. However, the major difference here is that now the SEC must give a proper reason why it was rejected. By reason, in the review, given no real, I wanted to say goal, but that's not the correct word. No real reason was given. That's basically what has occurred. And it has the market a little bit in uproar. Naturally, like he said, Whalewire said, plenty of Bitcoin maximalists are saying, yeah, it was approved, while in reality, and that's indeed a very important subtlety that needs to be highlighted, it wasn't the case. The SEC only got a little finger tick whereby it was said, look, guys, please do another review, and this time state your purposes on the why. That's basically it. Now, this remains quite important because this little tick on their fingers might imply that they must come up with valid reasons on which the other institutional investors like Fidelity, BlackRock, perhaps even MicroStrategy can base their application for a Bitcoin spot ETF with the SEC. Because at that point, the SEC is clarifying why it was rejected in the first place, and they can do reviews and make it so that it cannot or can no longer be rejected. So it's really an administrational win that counts. So it's quite important still, despite this subtle highlight. Let's continue. This is basically what I mentioned and let you guys see here. So Blockchain Talk episode 89, wherein I explained the various differences between the various ETFs that can be launched, together naturally with the important distinctions. Naturally here, ETFs, be they future or spot or anything else, only serve to leverage the market. Trading them means trading paper Bitcoin. I still stick by my guns where it concerns ETFs. Bitcoin you do not own or possess, because it's paper Bitcoin. It's virtual Bitcoin, in the sense that virtual means non-existing Bitcoin. Not actual Bitcoin that you are trading. Spot Bitcoin ETFs only creates institutional investors as Bitcoin whales, which isn't good either. This, in conclusion, that's the most important lesson you guys need to understand and keep by. If there are any questions on the why, you guys can DM me, ask the question. I will get into it in detail for you, but not during this live stream. There's a few topics I want to cover, and I want to get these live streams that they remain limited for 1 hour. Next news item. Ben, between brackets, BitBoy Crypto fired from his own company in a coup. What is going on? So this is the next topic we are going to cover here. Now, people who watch my channel and have seen a variety of my live streams, both the Dutch as English ones, will know I'm not all too much a fan of BitBoy himself. Those who follow my social media might have noticed that I'm not particularly a big fan of his, and on a frequent basis called him out for, shilling literal shitcoins and trying to scam his audience. However, I want to highlight this by reason BitBoy itself still remains, the brand BitBoy, I have to say now, the brand BitBoy still remains an important influence within the crypto sphere. By reason, he's been around for quite a while, and he's a person with lots of controversy, and there's more things to it, but we're going to glance it over here. So basically, what is this? Join Bencoin. For those who are not in the know, Bencoin is a project which is now spearheaded by Ben Armstrong, also known as BitBoy, which has now been fired from the brand BitBoy Crypto. He's now spearheading it and took over the project. If you want to know what Bencoin is about, I'm going to say look up on one of my other live streams, which is called the Crypto Bull, where I do a fundamental and technical analysis of coins. I'm going to be brutally honest, that was the most shitty project I have encountered to do a fundamental and technical analysis on. That's all you need to know. I still wish him luck now that he's spearheading that project, that he can make something decent out of it, although from what I've seen, there isn't much good going on. Anyway, so just so you know, Ben Armstrong, formerly known as BitBoy, is now behind Join Bencoin. Now, what happened? Well, there's quite a lot of ripples going on the market. Basically, this little article here says what occurred, and they say, look, his fellow compatriots on BitBoy Crypto kicked him off the Hit network and the entire, well, actually from the entire network he built. And actually, BitBoy, in traditional style, um, causes a lot of drama and said, "Look, DJ Shed and Justin Williams have attempted to coup at my company. It's going around. It's true. There has been a mutiny at BitBoy Crypto and Hit Network. It don't work. They have no leverage until they can clone me. I have nothing to worry about." So he's causing drama. He's being angry because he got kicked off. Why did he get kicked off? Well, as you guys can see here in the article, controversy surrounding Ben Armstrong, departure amidst token questions, and investigation rumors. BitBoy has actual lawsuits going against him. There are a variety of topics he is no longer allowed to discuss, one of which is FTX and FTT due to having stalled Sam Bankman-Fried and having shilled the FTT token in the past. On my social media, if you type in BitBoy and FTT, you may find a few tweets with evidence where you see him actively shilling the token before deleting all of those videos and distancing himself. Plenty of other examples exist as well. So he's been a renowned shiller. That among other things, he also has a past history with substance abuse. So that isn't all too nice. So that's basically what the article is highlighting here. Let's head on over towards the actual tweets, the actual conversations which have been going on, to remain factual here, to not deviate all too much. So this is their official announcement. So yesterday, BG Investment Holdings, the parent company of Hit Network, took decisive legal action in removing Ben Armstrong from the company and specifically the BitBoy crypto brand. This difficult decision is a culmination of prolonged effort to help Ben during his relapse into substance abuse, as well as reconcile the emotional, physical, and financial damage he has done to the employees of Hit Network and the BitBoy crypto community. BitSquad deserves better, and we are going to get through this together. Wish him the best and regret that it has come to this, and are hopeful for the future of BitBoy crypto. Basically, the main argument why he got sacked is rather straightforward and simple. There is talk of indeed substance abuse, and as the tweets evolved, I noticed that he was on a mixture of diet pills and a variety of other medication, which made his temperament a little bit unstable. For those who follow BitBoy, well, they know of his recent outbursts earlier this year, whereby he was insulting people, getting on a literal rampage on live stream, indicating that not everything was going all too well with him. Actually, this little answer from PolyOX highlights a few of his anger rants. As you guys can see, he's not doing all too well, hitting the microphone, yelling, shouting, and that's what is being seen on camera. So I'm assuming he's still keeping calm, but as soon as the cameras went off, I wouldn't put it past him, if you are in such a state, that you might be destroying a few things hitherto in a rage. Now, you have to understand, the guy itself is quite renowned, has 1 million followers, or had 1 million followers, and plenty of them were spewing hate towards him. In a certain sense, I might say I was one of those guys as well, although I am much more tempered and simply highlighted a few times things which were contradictory into what he was saying, and then claiming otherwise a few days later. So yeah, I didn't go actively trolling him, but anyway, so he got sacked for substance abuse and probably doing damage. This is the actual rebuttal tweet he made. So yeah, true Bitcoin, as you guys can see here. That's the thing, and I see my answer is still on top here. Take care, Ben. At least you can now give 100% focus on Bitcoin and make it work. I'm actually quite genuine in that response, by reason. Okay, he got fired from his BitBoy crypto brand, However, despite my dislike for Bitcoin and the antics Ben Armstrong is up to, I am always a fan of people trying to build things in the crypto sphere. So I'm actually 100% genuine here by saying, look, do your focus on Bitcoin, make it work. Major reason is, well, from what I've seen, currently it still was shit, so now we can divide his full attention to it and make it work. That's basically it, really. See, there's another tweet here. I remained open. I've chosen. I'm wondering why. Oh yeah. So yeah, he's now tweeting from Join Bitcoin, pushing a little bit on his followers to, well, keep the pressure on Hit Network, perhaps in hopes that he wants to become rehired. Though the announcement looked quite hard, solid. So yeah. He also posted something about substance abuse, his bill of clean health. So no heroin, no amphetamines, no cocaine, marijuana, opiate, penicillin, certified, yada 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 yada. Benjamin Armstrong, reasonable suspicion cause. So yeah, he's trying to prove he's not on substance abuse, though they have tested him on the major used drugs, but substance abuse can come in a variety of other ways. Can be alcoholism, it can be, well, through the use of diet pills, mixing it with an other innocent drug, I'm going to say, on which they haven't tested. So test results, well, are good in order to provide clear clarity that he isn't on marijuana, cocaine, or heroin, but there's other substances which can be abused. So he's basically defending the brand, well, trying to get rehired and having anger issues with the brand he created and got kicked out of because of his anger issues, which is showing quite literally here. So enough about BitBoy here. I'm going to close a few tabs here to get the processor up to speed. And we will be diving straight into the next major topic I want to cover and have more focus on future-wise, and that's about Bitcoin mining, mainly renewable Bitcoin mining. This is a website by Daniel Batten. You can find him on Twitter. I believe it was DS Batten or something like it. Is at DS Batten, I believe his name was. On Twitter, his alias. And he's a guy who's actually quite occupied with everything that's renewable about Bitcoin mining, the entire subject behind it, trying to prove to the world, look, Bitcoin isn't as polluting as a majority of major players like Tesla, like Greenpeace are saying, that there are old studies that have been done by Cambridge University are wrong or were based on, I'm not going to say false or fake data, but lacking data structures, or even what's the word again? You can clearly see I'm Dutch here and I need to search my words in English. Certain data which is lacking. Can't find the exact word that I want to use here. This is one of the articles, Bitcoin by energy source, something I want to begin with. So he's making note of, in previous literature, Cambridge Center for Alternative Finance postulated that a major energy source used by the Bitcoin network was coal. In my February 2023 article in Bitcoin Magazine, I suggested this conclusion would need to be revisited, as it was based on the data set that did not include off-grid mining as acknowledged on their website. This report is that revisitation, when off-grid mining is factored in, we get a full picture of the Bitcoin network. Major energy source is hydro. 23% of all Bitcoin mining by hydro. On-grid, 15. However, more than half of all sustainable off-grid mining is hydro-powered. Sustainable mining companies such as Ocean Falls, Block Fusion, Hive, Iris, Sato, TerraWolf, Satar, Lake Parime, Lucha, and HPG are examples of companies that are either 100% powered by hydro or majority hydro powered. It gives it here with a nice degree of the various energy sources, low carbon, fossil fuels, etc. And that's for global electricity from low carbon sources. And he's actually pointing out here that in the often quoted Cambridge Center for Alternative Finance report on Bitcoin mining, that they alluded a part of the what's the word again, of the equation, that's it, where it concerns to get a full picture on Bitcoin mining. And he says, look, they've based themselves on this. The global, well, the sources from which global electricity comes from. And you guys can see here, yeah, the majority is fossil fuels. And Cambridge University back in the day, because I've made tweets about it as well, mainly focused on the data centers themselves, the renowned ones. And they situated it back in the day in China, where a majority of the grid is reliant on coal for production of electricity. And they made a mistake of one-on-oneing it. They didn't take a deeper look on the variety of data centers which exist. Well, the various servers where Bitcoin mining pools are situated and where they took their energy from. And that's actually a very important indication, very important aspect of the equation. You can say, oh yeah, for example, Belgium here, most of our electricity is being produced by nuclear centrals. So we're making use of uranium here. And a greater part is based on gas. And you guys might say, oh yeah, so that means if there's a mining pool here in Belgium, it is being made with electricity produced from nuclear fusion and gas. Nuclear fusion, so Bitcoin is adding to nuclear waste and also polluting with gas. Well, in reality, there might be the case of a data center here in Belgium, which works 100% on renewable energy, on hydropower, on wind, on solar energy, etc., etc. And still, we are talking here about mining pools. Those are just data centers which use a little bit of energy in order to pool together all the made hash rate from all the miners which are linked to the mining pool in order to solve the equation and distribute the information once again towards all the miners and actually the rewards. But that doesn't mean they are mining themselves, because at this moment I'm talking about data servers, meaning those are nothing more than big computers where all data enters, where all the hash rates are being added up in order to solve the blocks on the blockchain from the Bitcoin network. That's the data centers I'm talking about. But you've got also mining companies, and those mining companies, well, okay, they take a big load, but at the same time, and this is very important from what I'm going to tell you guys now, the biggest importance that concerns Bitcoin mining is to push your costs as low as possible, which implies that you will try, well, to dampen naturally all your costs, which means you will be playing with your energy bills, because the highest cost on a Bitcoin miner is the energy that it is using. And how do you do so? Well, quite frankly, you are, as a miner, are going to try to be as renewable as possible. By reason, renewable energy, as the word says, is renewable. You are making your own energy. You are directly using energy which has been produced from a renewable source, like hydropower, wind power, solar power. Biomass is also a possibility. For that, I'm going to refer to Renewablocks. More on that later. And that's the energy you're going to use for your miners. By reason, if you're going to continue taking from the grid, which might be coal, gas, or nuclear powered, well, your costs are going to skyrocket quite quickly, especially if we're talking here about Bitcoin mining operation, not even as a singular miner with, well, a singular person with his very own miner. So that's an important thing to remember here. And in here he continues with the distribution, future forecasts, etc. Let's head on deeper into it. By the way, there's still an introduction to renewable Bitcoin mining, just so you know. A little tweet I made as a small reminder. What is Bitcoin mining? How does it work? And is it a feasible way to make money? Full explanation. So this was a question I received some time ago. And this is just as a reminder to tell you guys what Bitcoin mining or crypto mining entails. Mining crypto is basically using computer calculating power to perform and check algorithms on the blockchain of said crypto. Mining power is dedicated to verifying transactions on the blockchain, solving algorithms in order to find the next block on the blockchain. This is being said in a very simplified way, but it would do for now. After a set amount of work is done, when a block has been verified and found, will the computers and their users be rewarded with a fixed amount of coins tokens. These mined coins tokens are newly generated and added to the pool of coins tokens in circulation after a first transfer has been verified. Meaning, as soon as you have mined a block, you received a reward, and a very first transfer needs to be done in order to say, look, new liquidity has been added to the already existing pool. Mining is a lucrative business on the following conditions: sufficient calculating prowess. Naturally, a computer needs to have the sufficient calculating power in order to guess the next hash of the block in order to get rewards, especially during the initial stages of a launched currency. Most of the time for Bitcoin, when joining a mining pool, will you make money, in the sense that in a mining pool you are all aggregating your hash rate into one singular pool, which increases the chances of success of mining a block and getting the rewards. And that's important, and I don't think the date is mentioned here. Yeah, that's from 13 October 2020. I already said it back then, but when using renewable energy sources to power your mining rig, implying that you want to lessen your costs. You want to have an autonomous system consuming your electricity, meaning that if you have a Bitcoin miner, you want a renewable energy source to supply the electricity so you do not have to take it from the grid. By reason, the renewable energy source, such as photovoltaic modules, so solar panels, will create electricity for you for free, because the sun always comes up, produces electricity for you, which you can use in your house, or in this case for Bitcoin mining. Yeah, I'm taking a few breaks here because my throat gets dry. Anyway, little example. I've always been a fan of innovation when it concerns Bitcoin mining and blockchain technology. Renewable blocks, pushing boundaries, and being a strong step forward. Very want to see my talk with Jake Mennett being mentioned on the site. So I had a little talk with Jake Mennett from Renewable Blocks. What is Renewable Blocks? Well, I'm going to revisit the site here. The stream is still up on YouTube. You guys can watch it. It's an entire in-depth interview with Jake himself. He's the CTO of Renewable Blocks. And what is it about? Well, it's the world's first renewable Bitcoin mining company to tokenize and list on T0. Okay, yeah. Most important here, they made a few changes. It is a renewable Bitcoin mining company. And in short, what do they do? Well, they tokenize naturally their mining, but they're making use of 100% renewable energy. It is being sourced from a 10 megawatt solar facility built in Costa Rica. Bitcoin miners are being located over there. So that's basically it. And they get further into detail about immersion cooling, which is quite important, by the way, for a variety of reasons. Later on, I will talk about a little simulation I've made. More into detail there. So basically, what is Renewable Blocks? Okay, talks about security tokens, etc. Thing is, plenty of companies occupied with Bitcoin mining are seeking renewable ways to produce electricity in order to start mining, meaning that the myth, the claim that Bitcoin isn't as sustainable or renewable as it should be is actually eroding. That it might even be wrong on a fundamental level by reason plenty of miners and mining companies want to use renewable energy as the main source of electricity in order to lessen their costs. And this is exactly what Renewable Blocks is trying to do. And this is a little case study I've made. We'll get into it. I'm going to just see what the other two tweets were about that I've prepared. Yeah, I do minimal preparation here, but oh yeah, I'm going to show you guys. I've been talking about Renewable Blocks. This is the actual link. I'm going to put it in the chat and show it on screen. Naturally, you guys can see it. Hold on a second. You guys can still see it on the main website if you guys want to. Later on, I'm going to keep it there. That's with Jake Menard. That's the interview I've done. You guys can see it's been a while. A variety of titles, recycling, mostly talking about Ravencoin, KYC, transparency, etc. So this is the entire interview I've done. This is the link as now shown on screen. I think I made an oopsie. Come on. Doesn't want to. Okay. No biggie. And this is... Oh yeah, right. This is a case study I've made a few days ago. We're going to get deeper into it, as up until now I've mainly been talking about companies such as Renewable Blocks making use of solar energy and already existing solar farms, I'm going to say, or big industries which produce renewable electricity and hook up their Bitcoin miners. Other cases exist, such as can't immediately think of something, but I know if you visit the website of Daniel Batten and follow him on his Twitter, he will come up with and retweet and repost a variety of companies which make use of waste energy, such as methane and gas, which would otherwise be fled, in order to produce heat that is transformed into electricity in order to power a variety of Bitcoin miners. So a sort of recycling going on, producing a better yield on the machinery, making use of waste energy, etc. Now, that was more on a company business level. This is more on a personal level, meaning up here, I'm really talking about individual miners, people like you and I who have a Bitcoin mining machine at home. I did a small simulation here, and as you guys can see, a case study, renewable Bitcoin mining as home solution for greenhouse farming. So what did I do? Well, I said, look, I've created my crypto mining course in which you learn how to do a profitability calculation, which means before you start mining, you need to figure out if it's worth your while or not. And that's basically what the entire crypto mining course is about. It gives you an overview what mining exactly is, how you do a profitability calculation, when to mine, what not to mine, etc., etc. And I went deeper. And I said, look, we have our mining rig. We might make a profit. All is well. However, we can push it a little bit further by reason all those myths about Bitcoin being based on an unsustainable energy, unsustainable energy myth, I'm going to say we can do better. We can greenify Bitcoin mining even more. And in here, I give you a step-by-step explanation what I have exactly done. And I wanted to know how much energy is wasted with Bitcoin mining. And here, I set the stage to calculate on how I can make my miner entirely green, that I can transform it from making it use grid energy to making use of a renewable energy source. And I've pushed it even further by saying, look, each and every Bitcoin miner produces a certain amount of heat which is being considered as wasted energy. And any miner can tell me this, even the big businesses. They've got plenty of miners around that produce heat, and they need to ventilate their rooms, and they need to foresee an air conditioning, because otherwise the miners start overheating, aren't functioning well, etc., etc. And I said, look, I'm not only going to make this renewable, I'm also going to make use of that energy. And in here, I did a little calculation with based on another study done by Nansheng, Yunxi Xuan, and He Zhao, whereby I first made the calculation of how much heat is being produced by the miner in effective watts before I transform it into a medium that I can use to warm a greenhouse for greenhouse farming. And well, this calculation here is basically saying, look, how much heat is at overall being produced by the miners. And in this study, they made use of a WattsMiner Micro BT M36. Plenty of details that I've got here. And I said, look, okay, the percentage of heat produced by the miner in comparison to the amount of energy in electricity being used is about 15%. So I'm going to highlight exactly what I'm talking about here. So that the mine demands a total of 3.3 kilowatts of electrical energy and produces about 507 watts in heat, which is otherwise wasted energy. And I said, look, we shall expect 15% of energy produced by the miner as heat during the case study. Meaning that if you take your miner and your miner says, look, I'm using 4 kilowatts, you can go by the idea that about 15% of the kilowatts being used by the miner is going to be transformed into heat. Naturally, I made a little distinction here, depending on the miner, how new it is, where it is placed, what medium it is. It can vary between what I said here, 15% up until even 40% in heat production. Everything depends on the miners themselves, the ASIC miners, if you're using a GPU miners, on the medium you're using to cool the miners, spacing, how well it is isolated, how efficient they are, etc., etc. I continued by saying, look, let us design the heating for the greenhouse. Meaning, I'm a little farmer. Well, I'm a home farmer. I grow my own vegetables. I've got some produce in my garden, and I want to make use of my garden year-round. So I invested in a little greenhouse. But naturally, during winter, it can get quite cold here, and I want to have produce even during the winter. So I said, okay, I've got a greenhouse, and I'm going to now calculate its heating demand. And for that, I had to rely on my knowledge as a project engineer in my 9 to 5 in heating, ventilation, air conditioning, and in renewable energy. And I made a heating calculation, and I said, okay, look, the surface area, that's the amount of energy demanded, yada, yada, yada. And I designed my very own, I designed the heating needs, and I said, okay, with the existing technologies, I'm going to need that type of radiator. I'm not going to use underfloor heating to save spacing. I'm not going to use air heaters, etc., etc. Dimensioned the proper module which will produce, which will give off the heat in order that the greenhouse remains frost-free, which is a Type 2 22 radiator of 60 by 90. You guys can tell here. And I said, okay, now I have everything. I know how much heat my miner is producing. I know what a heating demand is for my greenhouse. The heating demand can be covered by the heat that a miner is producing, but now I want to make it renewable. By reason, at this point, I was still talking about a miner which is connected to the grid. So that I'm going to make it renewable. I'm going to do an entire calculation in order that a miner can remain functional 24/7 on renewable energy. And for that, I said, look, plenty of renewable energy sources exist: photovoltaic modules or solar panels, micro wind turbines, micro hydropower systems, bioreactors with generators, etc., etc., etc. And I opted for photovoltaic modules by reason, well, I do not have a river in my backyard. Where it concerns micro wind turbines, one, my garden is slightly too small and it's going to be much more costly than simple photovoltaic modules. And naturally, with the problem with micro wind turbines is that I'm going to need continuous airflow, which isn't really present here because I'm quite I'm not going to say in the middle of a city, but the outer urban areas. So there are some houses here, but plenty of obstacles, which makes that there isn't always wind going around here, especially on hot summer days. Micro hydropower systems, like I said, no rivers nearby. Bioreactors with generators. I do not have a farm whereby I can use, well, manure, etc., or other biomass like old vegetables, etc., that I can what's the word again in English? Which can be digested by microbes, produce heat from which I can detract energy to make electricity. So I had to go with photovoltaic modules. And I did the entire calculation and I said, look, okay, the miner is demanding that amount of energy, so I want my photovoltaic modules, my entire system, to cover said demand 24/7. And I said, okay, look, at least 3.4 kilowatt hours of energy during the day. Okay, so little explanation on how the grid moves, how demand is, and I said, look, in reality, it's going to be a straight line here. So I'm going to dimension my photovoltaic modules, kept in mind the orientation on how they were orientated, under which angle, the percentual decreases or increases I would be having due to it, calculated the entire thing, and I said, okay, I'm going to need this amount of modules, going to need 12 modules in order for my operation to remain renewable, that it can function 24/7 solely on solar power, solely on electricity produced by the sun during the day. And I extended it and I said, okay, look, naturally my miner, I'm not going to switch it off during the night. I want it to run for 24/7, the entire time without a break. So I will be needing coverage of electricity during the night. And then I dimensioned my energy storage system, which is also being powered by my solar panels. On that account, I can say I will run 24/7 on renewable energy. And that's basically what I've done here. I said, look, these are my solar panels. I'm going to over-dimension it. These are the battery systems I'm going to need to cover it. And say, okay, look, all that is done. I've got my modules, my battery modules, which are covering the the electricity load during the night. Got my solar panels, which are charging that storage system and at the same time giving enough energy towards my miner in order to continue mining. So I've got a 100% renewable Bitcoin mining operation, which can run 24/7 without any interruption. And naturally, I said here, look, step 4 conclusion. What I've created here, based on calculations done for the return of investment for the miner, see my crypto mining course, heat load needed, heat of production for the miner, my photovoltaic need, and my dimensioning of the home energy system. There's a few ending notes I have indicated, and if you guys have troubles, questions, you can find me on my socials, etc. So basically, this case study is a factual study I've done in order to make a 100% renewable mining operation for a simple guy like me here at home. Not only that, I made sure that the energy being wasted even during mining is going to be repurposed in order to power a greenhouse farming project, meaning that I'll be growing my own vegetables based on Bitcoin mining. I mean, that's a great idea. And plenty of these things can be done by individual engineers, by any guy who is technical literate. This is perhaps for some a quite complicated way, but I've written it in such detail and I've tried to simplify everything that even if you follow these steps, you guys too can do the same thing to build something on a low budget, to make your Bitcoin mining system renewable and at the same time do something extra with the otherwise wasted energy from what already is renewable in the form of heat. In this case, I did a greenhouse farm, but you can use the heat to power, for example, I don't know, a little sauna, preheat a little bit water for a sauna. I have to be correct here. In the study that I quoted here, these guys made sanitary hot water. So hot water from the faucet to do your dishes, to take a bath, into shower. I mean, the possibilities are endless. You just have to be creative. On an ending note, perhaps it's a little chill, because it's also something that I have here in house as a little gadget, which is a little nerd miner. I said, look, this is my case study for a renewable Bitcoin mining operation with a big ASIC Bitcoin mining machine. But there exists something such as lottery miners. And people will say, yeah, but it's a waste of space. You only got a very small chance, to mine a block with it. In our blog post that I made, perhaps I can show it to you guys here because it's also quite recent. Shiny item, that's not it. So yeah, I've also made a few guides in order to talk about token standards here. This is a dedicated post about the nerd miner, and it generally talks about the lottery miners and their importance. And really, to abbreviate it, because I'm almost hitting 1 hour of live streaming here, lottery miners are quite important because it has very low hash rate, but at the same time it decentralizes the network even further with a few kilo hashes at a time. Sure, you aren't really standing a chance to mine a block, but there's still a very, 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 very small chance you can have so. But you're doing it, you're making use of lottery miners in order to support the Bitcoin network in a fully decentralized and small way. In a sense that, naturally, it will still be redirected towards a mining pool, but if you mine with such a lottery miner, those are a few kilo hashes that aren't subject to regulations by big mining pools who can redirect their hashing power towards certain decisions. That little hashing machine, you actually have a little vote to say, I'm supporting the Bitcoin network. And that's the power of lottery miners. And in this little post, I said, look, I've done it for a big one, but with such small lottery miners, which barely use any energy, because the nerd miner I have, it is being powered by a USB entry on my computer. It demands what? 0.3 watts? At max, perhaps 1 watt an hour? That's peanuts. It's barely any energy usage. But at the same time, I'm still supporting Bitcoin network 24/7. And even for that, I can make it renewable. As I said here, a solar-based smartphone recharger. There exists power banks with an integrated solar cell, solar module. that you can leave around the house by, say, on a well-lit place against the window, little USB, miner on, and you've got yourself a renewable Bitcoin miner. It can be that simple. Naturally, the moment you start scaling, the calculations become more complicated, become more intensive, but at the same time, it also shows that on a personal level, where it concerns Bitcoin mining, things can become renewable quite fast, and that most studies, I'm going to start closing the things here. Oh. Sorry, small mistake. So where was I? Yeah, that even on a very small scale, things can become much greener than most major studies from Cambridge are telling you guys. Because they said, yeah, we're looking at the major energy use of the grid per nation, per country, and we're going to say, yeah, Bitcoin mining, one miner uses that amount. We take the amount of terahashes, etc., being produced. We're going to say, okay, yeah, that's the percentage of coal that Bitcoin is using. While in reality, with the things I've said and I've already done, reality, that percentage is going to be much lower where it concerns the use of fossil fuels in Bitcoin mining. And that's actually the things I want to start highlighting in future blockchain talks. So you will be seeing me discussing a variety of articles written by Daniel Batten, who is a big proponent of renewable Bitcoin mining, and debunking the various myths which exist about Bitcoin being unsustainable where it concerns mining. So in the future, you might expect such things more and more from me, where I get more and more into detail. And with that, I'm going to close this Blockchain Talks episode because I'm already over 1 hour. I'm at 1 hour, 2 minutes approximately. With that, I'm going to say thank you guys for watching. If you like my videos and the things I do, naturally, please like, subscribe, leave a comment down below. Visit my socials. You have seen that there's plenty of links down below in the comments or even in the description of this video. With that, I'm going to say thank you guys for watching, and up until next time, bye.